Hello, my name is Danny Prestige. I'm a certified financial planner here at Wood Financial Group, and I'm here today to give you the February stock market update. Now, we saw January get off to a tough start in 2016. The S&P 500 lost a little over 5%. That is technically the 8th worst January in the 60-year history of the S&P 500. It was caused in large part with investor confidence turning negative on continuing bad news coming out of China and falling oil prices. Now today we're going to take a second and talk about a few economic headlines that we saw over the last month, and maybe we're going to give you a little insight into what they could mean for you as individual investors. Now, fourth quarter gross domestic product here in the United States grew at just 0.7%. That's a little bit disappointing compared to the 2% growth we saw in Q3. Now, it is important to remember that this fourth quarter number will be revised a couple more times as additional data becomes available, so it could turn out to be a little more positive, but we're not expecting a huge increase. Now, what caused the economy to slow down in Q4? A lot of that can be attributed to lower business spending and weak global demand. But the data also shows that United States consumers just aren't spending the extra money that they're saving at the gasoline pumps. Now, does this slowdown mean that the U.S. is heading towards a recession? Most likely not. Now, while this isn't great news, we do need to remember that the economy actually went into negative territory in the first quarter of 2014, but then bounced back fairly rapidly. Now, in other news, the Federal Reserve met in the last week of January. They declined to raise interest rates again. While that's not a total surprise in light of the recent global economic challenges and market conditions, some experts believe the Fed's made the wrong call in backing off of their original plan to raise rates. Now, with such uncertainty and nervousness in the markets right now, a rate hike could have gotten investors a little more confident in the economy. Now, on the other hand, with low inflation and modest economic growth, the Fed may end up holding off on further rate increases for several months. Earnings season kicked off in January, and the overall picture is one of lower earnings and revenues. Now, while that's not a surprise, we do need to remain aware that more than 2/3 of firms that have reported have beat their earnings targets. Now, that tells us that managers are doing a great job managing expectations. Additionally, manufacturing activity beat expectations and came in at the highest level since last January. Now, manufacturing is the backbone of economic activity in many parts of the United States, and this improved data is a refreshing change, and we're hopeful about manufacturing during the year 2016. So that's it for this monthly market update. Again, my name is Danny Prestige with Wood Financial Group. If you have questions about your investments or the stock market, feel free to give us a call, 615-826-5749, or check out our website at www.woodfinancialgroup.net. We're also available on Facebook at Wood Financial Group. Thank you for watching.